Welcome back. I hope you are all ready to start our fourth session for today, where we are going to discuss how European and international initiatives can participate in closing the green investment gap. I hope everyone had a pleasant lunch and that you're coming back well fed and focused and ready for what will be surely a very interesting discussion. Before I open the session, allow me to introduce myself. I'm Gérald Audaz. I work for the European Commission, where I'm responsible for our regional cooperation with the Eastern Partnership countries in the field of climate change, connectivity, and private sector development. And I will have the pleasure to moderate this session as well as the next. During our sessions this morning, we have discussed extensively the magnitude of the investment needs required to transition to green and net zero economies. We have also come to realize that many potential green projects, including infrastructure projects, remain unfunded. We have also taken note of the fact that financial and capital markets in the Eastern Partnership countries and Central Asia have evolved indeed quite positively in the last years, but that there are still significant gaps to be filled in terms of responding to the investment needed. As you know, green investments often suffer from high upfront costs and present significant risk for both lenders and investors. But these risks, as you know as well, and we discussed this morning a little bit, can be mitigated and reduced. Experience shows that the careful application and use of public capital, public funding, can actually help very much achieve that. De-risking approaches employed by public entities such as the European Commission, but also many of our partner IFIs present here today to improve market conditions for investors will be the focus of the discussion that we are going to have during this session. And as you will see in our discussion that is about to start, de-risking can be achieved through a range of financial instruments such as debt bonds or debt funds, equity or guarantees, or again through currency risk management that help mitigate the risk across participating parties or by transferring the risk to a third party. To discuss all this this afternoon, we have with us a number of representatives from the European Commission, from the European Bank for Reconstruction and Development, from the European Investment Bank, as well as from the Currency Exchange Fund TCX, who have all been very active in the South Caucasus and Central Asia in putting in place programs and instruments to support green financing and mitigate investment risks. Before I give the floor to our esteemed panelists for what will be an extremely exciting discussion, I'm sure, I would like us to take advantage of a study that was recently launched by the OECD on de-risking green investments in the Eastern Partnership countries and Central Asia. We have with us Mr. Matthew Savage, who is the director at Oxford Consulting and who has been leading this study for the OECD. Mr. Savage comes with a solid track record and in-depth knowledge in the field of climate finance. Over his career, he's worked for a range of bilateral and multilateral agencies, and he has recently led the evaluation of a number of climate finance funds, such as the Green Climate Fund or the Climate Investment Funds. Mr. Savage, welcome. Thank you very much for being with us today, and it is my pleasure to hand over the mic to you. Thank you.
Thank you, and welcome, everybody. So I've been working with OECD on environmental finance in the EAP region and Central Asia for almost 10 years now, if not more than 10 years, and have seen how the markets have developed, but also how the international offer on environmental lending and climate finance has developed over that time as well. We have a lot of people who wish to speak in this session, so I am going to be as short as possible, but I just want to set the scene for some of the trends that we can observe in the markets and in the international instruments which are being provided. So I'll start off with a few words about barriers and then speak about each of the individual instruments, including credit lines, the work of some of the global climate funds, some developments in the capital markets and private equity markets, as well as emerging risk hedging instruments. You've heard a lot already about some of these barriers. I think it's fair to say that all of the markets in EAP and Central Asia still have some distance to go in terms of their environmental and climate regulation and market development. I'm hoping that this presentation will come back up. What we notice is that environmental finance and climate finance are subject to the same sort of macroeconomic risks, geopolitical risks that the rest of the economy is subject to. So the global financial crisis, COVID-19, the Russian war of aggression have all significantly impacted both financing flows and the ability of international institutions and donors to operate in the region. So in some ways, climate finance is not so different to other types of development finance. On the specific sectoral issues, we do see sort of perceptions of risk amongst investors. These tend to be less now around technology risks. So 10, 20 years ago, investors didn't understand really renewable energy markets or energy efficiency or climate resilience. They do now, but the sorts of risks that investors have are really around or shifting more towards macroeconomic risks and governance. If a country is sort of uninvestable in other sectors, it's likely to be uninvestable in environmental finance sectors as well. So the burden of opportunity is moving towards improving overall private sector development and governance frameworks. The first of the instruments I'd like to highlight, and this is really where the international community started, is around credit lines for primarily energy efficiency, but also small-scale renewable energy lending. And this has been an area of activity for donors and the international financial institutions for the last 20 years. We're currently doing a stock take of and updating a previous stock take on how much has been provided. But we estimate in the EAP countries and in Central Asia, it's in excess of 1.5 billion euros over that period, which has been provided on concessional terms by donors and the IFIs to local financial institutions for on lending. You can see there some of the institutions who've been involved, EBRD, EIB, both of whom will be represented on this panel, but also some of the European development finance institutions, Austria, the Scandics, Germany, etc. These credit lines have really been used by the international financial institutions and donors to push interest in the EAP region in developing environmental finance products. However, I think it's fair to say it's been challenging to date to persuade local financial institutions to take this up as a core business line without IFI incentives and support. And I think the discussion this morning with Emiria Bank indicated that unless a financial institution makes this a strategic priority, and unless they create capacity and a strategic focus, then it's difficult to build momentum in this area. The second trend I'd like to highlight is the rise of the global climate funds. Those of you in the IFIs and in national governments will, I have no doubt, had terrible experience of trying to raise capital out of the Green Climate Fund, out of the climate investment funds, very long and bureaucratic competitive processes for finance. However, donors in Europe and progressive donors are finding it increasingly difficult to justify bilateral programming. There are pressures on budgets, there are pressures on staff costs in the national ministries. So they're using the Green Climate Funds, the Climate Investment Funds, as ways of shifting capital. So these funds are becoming more important. And then these funds are on investing or on lending through the IFIs and MDBs or directly to national counterparts. And you can see here that GCF has already approved about $700 million in finance for the countries in this region. Climate investment funds did about $500 million across a range of countries. And EBRD, who will be speaking next, so GCF finances 5 of their regional and national programs. So the climate funds have become an integral part of this picture. Obviously, this is part of a wider set of policy support, donor funding through the MDBs and through bilateral programming. A couple of examples on here, for example, so EU for Climate, which is quite close to home, doing policy support, NDC development, LEDs development in the region is an example of that. The International Climate Initiative in Germany, we estimate, has made 700 million euros available through national and regional programs, which are accessible at least to countries in this region, which is then programmed through the MDBs, through national agencies, and blended with DFI support. These flows are quite significant. So if you look at the graphs, we estimate that Central Asia, for example, has had approximately $9 billion in climate finance over the last sort of 6-7 years, with Uzbekistan getting half of that. So that's about $1 billion a year in different types of climate finance support from donors and from the MDBs. Another area of development, which I won't spend too much time on, is the capital markets. You had an excellent presentation this morning. The only thing I'd like to stress is that often in these bond issuances, the IFIs, such as EBRD, are playing a key issue as an anchor investor. And you can see in some of the bonds that we discussed this morning, EBRD has taken quite a sort of strong position in those. You also see, for example, FMO, the Dutch Development Finance Organization, participating in the Ameria Bank transaction. IFC and ADB participating in the Georgian Renewable Power Operations bond in 2022. So the IFIs are playing a critical role in those capital markets where the markets themselves are not yet ready in terms of the standard public issuance. It was also mentioned the credit enhancement schemes and technical assistance, which goes around these bond issuances. Another area which is under development, but which has been slower, is the development of private equity investment. The international community has put significant money into supporting private equity investors. Not many in the region, but I have identified one here, which was the support given through the EIB and the GREF facility to the Caucasus Clean Energy Fund, which was a Georgian renewable hydro private equity fund. And here the international donors and MDBs provide funds for private equity to go in and to do these types of investments in higher risk markets. I think one interesting development, which was mentioned this morning, is around what are the sovereign wealth funds doing in those countries in the region where there are significant wealth funds and revenues. And one example here is that the Azerbaijan Sovereign Wealth Fund actually did invest in a private equity fund alongside some of the progressive governments in the IFC Catalyst Fund. So there is already some participation in green areas for that. The next type of instrument is really around sort of risk hedging. Currency risk is a sort of key challenge in that exposure to rapid changes in sort of currencies can create risks for investors that they're not prepared to take. So TCX, who we have on the panel and who will give more details about this, is one of the platforms who are addressing this, and this was supported by a range of donors, so Germany, Swiss, Netherlands, UK, as well as the development finance institutions. So they're pooling essentially capital in order to offset DFI type lending operations from a currency risk perspective, but also to support bond enhancement from a credit risk perspective as well. And I'm sure TCX will give more details on that. The penultimate slide really is around carbon markets. This has been a really slow area in the region. Some other parts of the world are developing much more quickly, such as East and Southeast Asia. There are a number of projects that have been registered on the voluntary carbon markets, including some renewable infrastructure projects, and a number of initiatives to try and bring that forward, and a couple of them were mentioned this morning, as well as support for national emissions trading. But it's certainly an area which could develop further. My final slide is really around the growth of interest in climate, both in the EU institutions as well as the IFIs. So one thing that we need to realize is that Paris alignment has become a real thing, and it's really driving targets, lending targets, policy targets, both the EU level and in the MDBs and DFIs. And as a result, what we see is a rapid scaling of the finance on offer through the MDBs, as well as the EU offer, which is evolving the earlier Neighbourhood Investment Facility stroke platform, or the Investment Facility for Central Asia, into a platform which has a broader set of instruments and greater ambition. And that's all coming together in the FSD Plus, the European Fund for Sustainable Development, and I think we'll have some comment from the panelists on that as well. So just in conclusion, the international community has been trying to do this for 20 years. And you might ask, why hasn't it been more successful in the region? But there have been really quite large inflows, billions and billions of dollars over that period, to try and encourage environmental finance. They've run really into a series of regulatory policy challenges, shallow capital markets, and a series more recently of financial and geopolitical events which have impeded that journey. I think one of the big changes that we've seen is that up until about 2020, it always felt as though the donors and the MDBs and IFIs were trying to push this agenda onto markets and policymakers who weren't really interested, or who had bigger concerns. I think what's really shifted post Paris is that the governments have now taken on policy targets, regulation frameworks, and investment needs targets. So the ownership has transferred to the national level, and there is an acceptance in the private sector that this is going to happen. So there's a new dynamic, I think, emerging, which is positive. The donors themselves are moving from more traditional grant instruments into more risk-focused instruments, guarantees, hedging, with a greater private sector focus. So that's going to be a trend. I think the days of large grant funds are disappearing, primarily due to the fact that a lot of these markets are now becoming more commercial. So renewable energy, energy efficiency, even parts of transport. These are commercial or near commercial sectors. So it's very difficult for donors and MDBs to justify concessional money going into those. Hence the need for not only environmental reform, but also wider private sector governance reform, because a lot of this can be funded through the private sector if the sectors and the countries themselves are investable. So it's a much broader challenge. I'll leave it at that, and thank you very much for your attention.
Thank you so much, Mr. Savage, for this very dense and interesting discussions. I think it provided us with a very complete overview of the partners involved, of course, but also the existing instruments and programs to support green investment, but also you very usefully provided us with an overview of the existing constraints, and I think that will feed our discussion today. Ladies and gentlemen, we have now, I'm going now to open our panel. We have 5 speakers with us today representing 4 different institutions. And the first speaker is actually a colleague of mine from the European Commission, Ms. Magdalena Kouneva. Magdalena, welcome. Thank you for being with us today. Magdalena is team leader responsible for green and sustainable finance in DG NEAR, so in the European Commission. She has 15 years of experience in development finance in developing and emerging markets, as well as in innovative partnerships for financing the sustainable development goals. So maybe I will start, Magdalena, by asking you the first questions. Could you please explain to us what the European Commission does to support countries in increasing green investments in the region, and maybe tell us a little bit what are the programs and the instruments that we have put in place in this respect. The floor is yours, Magdalena.
Thank you, Gérald, and thank you to the previous speaker, as he made my task much easier. I don't really need to repeat some of the challenges that were mentioned, some of the trends in the international development finance environment. What I really want to focus on is to give you a bit of understanding where we are with the introduction of one of these innovative instruments that were mentioned, namely the European Fund for Sustainable Development Plus Budget Guarantee. However, I mean, it is not really possible to talk about a budgetary guarantee without also mentioning the use of blending, and the Commission has been at the forefront of EU blending for many, many years. It has gathered valuable experiences. So, I mean, basically the 2 instruments are very different from each other, but they aim at the same objective. The main objective is to finance projects which otherwise would not be financed or not be financed to the same extent. When we talk about blending, we use limited amount of public grants to mobilize additional finance for these investments. And these are usually public sector investments, public infrastructure with very high additionality, where we have financing gaps, usually due to the low returns, but the economic social benefits of these projects are significant. And again, this has been used by many years, and it's an instrument we know well with proven track record. What is new is the budgetary guarantee, which, unlike blending, is an unfunded instrument. What I mean by unfunded, I mean there is no transfer of money attached to it, really. It is using the weight of the EU budget, which has a AAA rating. And as a result, it is able to de-risk investments or provide risk sharing, as mentioned previously, which is really important for some of these projects considered riskier to actually take place. What is also important is that it is unconditional guarantee, irrevocable on first demand, which means it's really provided when there are events of default. So if there is non-payment across variety of risks, so it provides a very comprehensive cover. It could be political, it could be credit risk. The guarantee can be called. So it's a very attractive instrument against which the Commission puts only a bit of funding in a special fund to provision against the risk, for the guarantee basically being called. So if there are claims, this fund is used to pay the claims. And because this fund is provisioned using the scarce public resources, it means the guarantee is provided at very concessional terms with really very high impact criteria in mind. Again, for green investments and investments that otherwise would be more difficult to take place. So this is the instrument. Again, question I often receive is which instrument is suitable when? I would say blending is really coming for markets where you have really low returns but very high additionality. But when markets are scaling, there is already some potential for replication, for consolidation. The guarantees are more appropriate. And again, they have this private sector mobilization focus, which is new in development finance. And the idea is to close significant investment gaps and mobilize many more times the investment using the limited public resources. The message I want to leave here, Gérald, is that these are just two tools in a toolbox. This is not replacing the need for country support, the need for traditional bilateral grants. These are just two additional instruments we use to be able to do more and scale up and mobilize much more investment. And I hope this illustrates it. And maybe just to give you a bit of an idea what this can be used for. The guarantee instrument, the budgetary guarantee, can support a wide range of investments and counterparts. We have, usually when it comes to sovereign type of support, so to states, we have exclusive arrangement with the European Investment Bank to use the EU budget guarantee. When it comes to, for instance, utilities, which are commercial sub-sovereign entities, we have dedicated finance, and we also have a variety of programs with different partners to actually enable such investments. And this is important, for instance, for renewable energy investments through the utilities. And more importantly, these days we pay a lot of attention to private sector mobilization. So we have guarantees that can be used to basically either provide finance directly to projects or through local financial institutions, both equity, both debt, or guarantees for risk sharing with other partners. And I know Gérald is losing patience on me, so I just want to just give a very really a summary page where we are. After a long assessment process, currently, we have approved 60 guarantee programs, which are for all regions, so not just for Eastern Partnership and Central Asia regions, but for the all regions. Out of these 60 guarantee programs, which come to, as you can see, 8.4 billion in guarantee coverage, 27 of these are actually focusing on the neighborhood regions, including 16 programs which are mainly focused on the neighborhood regions. Now, I have experience, for instance, on creating a program that includes neighborhood regions and Central Asia. So it's not that they're exclusive only to one region. They could be provided with different geographical scope. But the main point is that, at least for the neighborhood regions, the guarantee coverage of 2.4 billion can mobilize investments in the order of 17 billion in priority sectors. I think that is the main point for the Eastern Partnership countries. This allocation of is around 600 million in guarantee capacity, and this is, of course, supported with additional technical assistance to improve the uptake of the guarantees. And just a final line, we're talking about instruments that we're currently scaling up, and they will be used in any future instruments. For instance, currently we're discussing the proposal for the Ukraine facility and a dedicated instrument there. That dedicated instrument would also use a combination of blended grants and EU guarantees. So very useful experiences coming from this initial I mean, basically initially it was a pilot, now it's being scaled up. In the future, it will be really used in our development cooperation. I want to stop here and pass it back.
Thank you so much, Magdalena. Thank you for presenting us with the EFSD Plus guarantee instrument. I think it's indeed it was very clear and very short. Thank you for that. I would like now to give the floor to Ms. Ksenia Brockman from the EBRD, from the European Bank for Reconstruction and Development. Ms. Brockman is the head of the green financial systems in Central Asia, the Caucasus and Turkey in EBRD. Thank you for being with us today and for making the trip to Brussels. I would like to actually ask you the same question I just asked my colleague Magdalena. Can you tell us how EBRD supports green investments in the Caucasus and Central Asia? And what are the main programs that you have in place to support this? Over to you.
Thank you, and good afternoon to everyone. Thank you for having me here. Very glad to be presenting today. First of all, I want to say that EBRD, as governments, as our partners in the countries of operations, we are all facing unprecedented challenges related to climate change. And I think just over the last couple of weeks, we saw what has been happening on the planet. And we definitely need to act now. To the question of Gérald, there is a certain role for MDBs to play. And I think as our fellow MDB, we first of all have a key role in catalyzing systemic change in the countries, in driving policy reforms that enable private sector investments, and doing green investments, doing them right, being them aligned with the objectives of the Paris Agreement. Secondly, we are one of the key channels for concessional finance and different support instruments that are offered by donor organizations, by partners, by our key partner from EU. And again, these funds are critically necessary to enable investments in new technologies, in new solutions in the countries where the cost of those technologies can be preventively high or market barriers still exist. And finally, we are doing investments. We are actually investing in projects on the ground to create market opportunities, to develop nascent markets in the countries where we operate. And to show how EBRD engages, I would like to bring a couple of examples of activities that demonstrate what we do and that I'm particularly proud of, actually. One flagship program that we have been implementing in the neighborhood East countries is SME competitiveness program that has been supported very strongly by EU. And here we have been providing dedicated credit line facilities to SMEs in Georgia, Armenia, Ukraine, Moldova, to not only provide green financing, but also to drive transformation on the markets, to help small businesses adopt EU directives. So it's a combination of policy action with green finance. And we very much hope to continue this successful program in the region, but also expanding this experience to maybe even Central Asia at some point. Second important program is our EBRD Green Economy Financing Facility that has been supported by EU again, but also by many other donors, including Green Climate Fund. This program has provided 1.4 billion euro to countries of operations of the EBRD. We are implementing it in 10 countries. And again, here we provide funds to small businesses, to individual borrowers, to adopt green technologies, but also to increase resilience to climate change. And in many countries, particularly in Central Asia, but also in Caucasus, we are seeing changes that are happening in the environment, in the weather patterns. Extreme weather events are becoming more and more frequent, and we have to adapt for those changes. Maybe another critically important program for us is our EBRD Green Cities program. We have allocated 5 billion euros to support climate action on the level of municipalities, where we work with municipalities to develop action plans that are effectively investment plans for municipalities to sequence investments in critical infrastructure. And so such investments make not only economic sense, but have a lot of sense from the perspective of climate resilience, energy efficiency, fuel efficiency, and can help municipalities plan their activities ahead and also present themselves as a bankable counterparts for partners. Maybe one of areas that has been mentioned on the previous panel are capital market activities. And here we have seen the rise of interest from our partner financial institutions, but also corporate clients, to issuances of green bonds, in which we also invest. And what is remarkable, and I'm absolutely proud to say, is that many of the criteria and joint MDB methodologies that we have developed for climate and green finance have been adopted by our partner financial institutions and have been reflected in their green bond frameworks. And again, without joint action with the fellow MDBs and the entire financing market community, it would not have happened. So I'm absolutely critically proud of this aspect. And maybe last but not least, one of the key policy activities for us as a development organization is to help governments in all countries of operations to develop low carbon strategies, but also sectoral low carbon pathways for cement, steel industry, energy sector, fertilizer production, aluminium industry. And these investment plans effectively will help private sector investors to come in and invest in improvement and adoption of the goals of the Paris Agreement on the level of every company, be this company just part of the supply chain, or be this company key manufacturing facility in the country. This increased transparency will help us as financial market participants to make right decisions, to identify good investments and distinguish them from those that could potentially become stranded assets in the future. I think I stop here. Thank you.
Thank you so much, Mrs. Brockman, for this very, very complete overview of the instruments that you have put in place in the region to support green investments. And we are, of course, as the European Commission, very proud to partner with you on a number of programs that you have mentioned today. I will now give the floor to another fellow bank, actually the EU Bank. Our colleagues from the European Investment Bank are sitting next to me. And I will start with Mr. Edvardas Bumsteinas. I hope I pronounced it correctly. You are the head of the Asia, Central Asia and Pacific region under the public sector operations divisions of the bank. Thank you for making the trip all the way from Luxembourg. Thanks for being with us. And again, I will ask you the same questions that I asked the previous speakers. We would be very interested to hear from you. And I understand that your focus is more on large infrastructure projects, but maybe you will present your actions under a different angle. But I wanted to specify that. Can you tell us what you are doing to support green investments in the region, and maybe give us a bit of an overview of the instruments that you have in place? Over to you.
Thank you, Gérald. Hello, everybody. It's my pleasure to be here, and thank you to OECD for inviting me and my colleague to be here. So we'll be very brief because we are under strict time here, and please set it back to 0. Yeah, so first of all, I'm from EIB Global. What is EIB Global? EIB Global is an arm of the EIB which was launched last year. So we are almost 2 years old. And if you have time, you can look at the brochure online. We have explaining a little bit what we are doing. So the core principles of EIB Global are very much aligned with the principles of EU programming and policy setting. And as you probably aware, the major initiatives of the European Union are the EU Green Deal and the Global Gateway, which has been also launched actually during the programming start of the programming period itself. So in the Global Gateway, in fact, European Union pledged to mobilize 300 billion euros of investments to target. There are 5 areas, you can look it up, but of which 100 billion, in fact, is to be mobilized by the EIB. And the way we are going to do it is very much the way that our colleague from European Commission explained, Magdalena Kouneva, is through EFSD plus instruments. Now, another very important aspect is the Team Europe approach. And Team Europe, that's what I wanted actually to stress in this presentation. You will hear it a lot, and it can actually mean different things. One is the Team Europe in the programming sense. There are Team Europe initiatives that the European Commission has launched as part of the program targeted policy setting. And in Central Asia, that is really my area because I'm responsible for Asia, Central Asia, and Pacific. There are 2 Team Europe initiatives. One is EU Central Asia Digital Bridge, and the other one is Central Asia Water, Energy, Climate Change in Central Asia. I have printed the brochures. You can download them. There is a website for Team Europe initiatives. And it gives you a really good understanding where who are the partners and what these initiatives are trying to achieve. For the sake of time, I will not go into more detail about that, but I will give you some examples just in a minute. The other element of the Team Europe is actually bringing like-minded partners together. So even if they are not part of the formal Team Europe initiative, the partners that we feel like-minded, we still welcome them to the Team Europe family. So I also will give you some examples. So now going to the examples. In Central Asia, we have a number of projects that already are being developed, and one of them is environmental restoration of the RLC region in Uzbekistan, and it is considered a Team Europe initiative in collaboration with the French AFD. And the project has actually 2 stages. One is to support restoration of degraded land in the RLC basin while reducing negative regional effects of dust and sandstorms. And the other is complementary investment to modernize and improve irrigation infrastructure along the Amu Darya River while promoting sustainable water management practices. So this is very much linked to environment, access to water, irrigation. And that's an example where you have a French partner, AFD, but also European Commission with the guarantees and blending instruments also supporting this project. And obviously EIB is there with its resources as well. The other example is hydropower generation in Tajikistan. There is a very big project that is being developed and it's called the Rogun hydropower project. And in fact, the lead is the World Bank. We still consider the project as the Team Europe initiative because we feel that the partners who are coming together very much aligned and share common objectives. Then another example I would like to give, and that's the last example, is a program that we are doing together with our German partners. It's called Felicity 2 program. Felicity is financing energy for low carbon investment cities advisory facility, and it is a part of the International Climate Initiative of German government. GIZ is the technical partner, and we just launched it in Central Asia, in fact, in Kazakhstan, but it is available in many other countries, also in Eastern Partnership countries. So many people around here, I see you are from countries representing. So you can, if you have questions, you can come to me, but there is also a representative from the German Ministry of the Environment, Viviane Bertel. You can also reach out to her, and we will be able to assist you in getting in touch with the responsible people. So to conclude, now the risking here in all these examples, it comes at different stages. We bring partners who share the risks. Second, we also bring a lot of technical assistance and preparation, which makes projects bankable, as a previous speaker said. And third is just by joining forces, we can do much more together. Thank you very much for giving me 1 minute over time.
Thank you so much, Mr. Bumsteinas, for this short presentation. Thank you for sticking to the time. Very much like the Felicity acronym. I don't know who came up with that, but that's a very nice name. And also thank you very much for presenting the Team Europe approach, which is indeed the way we are trying to promote investments around the region. And as you said, by sharing the risks among several partners and by trying to catalyze financing as much as we can. I will now turn to your colleague, Mr. Andreas Berkhoff, who's also someone with whom we worked very closely on the access to finance front notably in Georgia and in the South Caucasus. Let me introduce you, Andreas. You are a senior loan officer in financial inclusion in the financial inclusion division at the EIB, the European Investment Bank. Again, thank you very much for coming all the way from Luxembourg. You are actively working in the region on promoting green investments in Georgia, notably, but also in Jordan. So we are a bit out of the scope of this conference, but you also cover Jordan as well. And basically, you are trying to promote investment by a combination of by combining loans from the EIB with the guarantees that the European Commission provides, but also maybe other partners, and by combining as well advisory services to support your investments. So I will ask you the same question. Can you tell us what instruments you put in place to promote investments in the region, and how you support the reduction or increasing the green investments? Over to you.
Of course. Thank you very much, ladies and gentlemen. It's a pleasure for me to be here. I will speak first a bit about the EIB's commitment to as the climate bank of the EU, and then move towards our experience in the Eastern Partnership countries, and specifically I'll end with a little case study on my favorite country, Georgia. So in 2020, the EIB embarked on the so-called Climate Bank Roadmap with a couple of high-level commitments. So I'm telling you a bit about what's happening in our institution, also as a bank faced with this challenge of supporting climate action. These high-level commitments are very ambitious. They include 100% Paris alignment of our operations from 2021 onwards. It was the second is increasing the share of our climate-related lending to 50% and environmental lending to 50% of everything that we finance. And the third is to support investments of over $1 trillion in the critical decade until 2030. So for outside EU, this commitment covers our operations inside and outside EU. For outside EU, this has significant implications on our business. It means that we are really set out to green our lending across all the business lines. So public infrastructure investments that Eduardo spoke about, but also the private sector lending. across all the regions where we operate, and also across all the products. So where we do direct lending, but also indirect lending via funds such as the JREF that was already mentioned, or also the Global Green Bond Initiative, which is also supported or will be supported by EFSD+. And we have to do so while at the same time also delivering on all the other existing and very important development priorities of our partner countries and of the EU. So it kind of comes on top. And we really have to see how we can green our business lines. We are on track with this plan, also very much fitting to the heading, which made a little question mark of today's event behind that. Last year, 46% of our signatures outside the EU were already green. So I think we are very close on to moving towards the 50%. Now moving to our experience in the Eastern Partnership countries, we have a very strong portfolio in the region. We signed over 9 billion over the last 5 years, covering both the public sector and the private sector. When we look at MSME lending, we have operations in all the countries of the Eastern Partnership, and we operate with a very broad toolbox, and I'll come to that in my Georgia case study, of products, and also work with various distribution channels as partners for our funding. And the EIB strategy for MSME support in the Eastern Partnership is centered around 3 intervention pillars: green finance that we're discussing today, inclusive finance, and then growth and innovation finance. So this green intervention pillar is one of the core elements of our strategic approach. Now moving to Georgia. Georgia is a country we started operating in 2009. We have an existing portfolio of over 2 billion since then. And around 20% of the portfolio relates to MSME finance. Actually, over the last 5 years, this percentage of MSME support in our portfolio is even 40%. So it's an active portfolio of over 400 million. We work with a broad range of counterparts and instruments. So on the loan side, we are partnering with 6 local banks and 2 microfinance institutions. We provide loans in hard currency, but also in local currency, synthetic local currency, and we're going to hear from TCX more about it. But the EIB also operates through its dedicated subsidiary, the European Investment Fund, portfolio guarantee schemes that are supported by the European Commission to de-risk the operations, currently with 3 banks in the country, and a lot of technical assistance operations with the banks. At the moment, we're 5 with 5 banks, and we have ongoing technical assistance projects. So now, how to green this portfolio? That was the challenge that we faced, because we really wanted to transform our portfolio towards a more green portfolio in the country. We started off with the technical assistance operation with the 2 leading banks, and this was focused on climate-related risk assessment and opportunity assessment, supporting them in stress testing, developing a climate strategy, supporting them on the disclosure side to report in line with the Task Force on Climate-Related Disclosures, TCFD, and then in training. It was a very interesting exercise because you could really see that the environment has changed. Also, thanks to the pressure from the regulators and the international discussion, their shareholders, they are both listed on the London Stock Exchange. We saw there was a game changer, and there was a real interest also from the board to engage with us and transform the bank and really on the risk assessment side when it comes to transition and physical risks, but also on the greening their portfolio and really come up with an ambitious strategy. So very interesting lessons learned. In parallel, so this is supported, these technical assistance operations are supported by our EIB Trust Fund and European donors. In parallel, we also started a technical assistance operation that is called Greening the Financial Systems, and it's enabled by a grant from the International Climate Initiative, from the German government, that works directly with the regulators. So very complementary to the technical assistance that we are rolling out with the banks. This allows us also to reach out to a larger pool of banks in the country. And this year, we're planning to sign several operations with a dedicated focus on a transition towards climate action, and a dedicated part of the loans that will be focused on green investments with several banks in Georgia. And the next maneuver is then going to be to complement this with partial portfolio guarantees and technical assistance that are supported under the EFSD Plus that you already heard. And this would allow us a really good combination, very strong combination of providing liquidity to finance the investments, of de-risking the operations through the guarantee support and technical assistance. And I stop here.
Thank you so much, Andreas, for this presentation. Through the prism of your operations in Georgia, I think we understand better how EIB supports green investments, especially in the private sector. Thank you very, very much for that. I would like now to introduce Mr. Xander Godrian. Thank you very much for being with us today. You are a Senior Vice President in the Trading Division of the TCX Fund, so the Currency Exchange Fund, where you work on sovereign hedging and manage the liquidity portfolio of the fund. Welcome. Thank you again for being here. Your organization plays a very specific role in the development finance universe, since your core business consists, if I'm not mistaken, in hedging currencies as a technique to mitigate the impact of currency fluctuations on the value of investments. This is obviously a very important dimension that is sometimes overlooked, maybe also because currency hedging is a pretty complex matter, which is not easily comprehensible for the layman, I must say. But I would very much like you to tell us what the job is about and explain how you support green investments in the region. The floor is yours.
Yep, thank you. Thank you for having us as well here today. Much appreciated. I will speak a little bit about TCX and then specifically how we plug into making climate finance work better, hopefully. So TCX is a global development finance initiative supported by the major bilateral and multilateral lenders. Many of them are here today, like the EBRD and the EIB, but also a number of Western governments, the Dutch, the Swiss, British, French, and German governments, and the European Commission, who I'll speak a bit more about later on. And as you said, we facilitate local currency lending, specifically from development finance institutions to their borrowers in emerging and especially in frontier markets. So I hope I'm going to say everything in layman's terms and it's easily comprehensible. But we offer a financial instrument. We call it a cross-currency swap, but that word is actually really not important. It basically allows us to convert a hard currency loan in US dollars or in euros into an index local currency loan in the home currency of the borrower, thereby stripping out the FX risk. That obviously makes debt payments much more predictable and contributes to debt sustainability that way. We as a company, we pursue the impact angle very strongly, and we operate only where we're additional to the market. And that's actually a very key bit because these markets are covered sometimes by commercial counterparties as well, which we are not. We are not commercial counterparty. And in practice, that simply means that we offer a solution to take away the FX risk in the most challenging markets. And today, we do that in over 70 currencies. And we call it the CIS region. So let's say the Caucasus, Central Asia is actually a very large portion of our portfolio. We were established in 2007, and since we have de-risked in this way about 12 billion of development finance flows in those 70 currencies. I made a single slide, if somebody can put it on the screen. It doesn't come up, I can explain what it says.
I think the colleagues in the back will put the slide on the screen.
I could talk a little bit further while it comes up. So basically, while the portfolio is global, it's a global mandate. It doesn't focus exclusively on Central Asia and the Caucasus. The current portfolio is actually heavily skewed towards Central Asia and the Caucasus, of around 30 to 40% of the total portfolio. I think everyone around the table here knows that one of the key reasons why that is that a lot of countries in the portfolio are very heavily favored by the multilateral banks because of the great growth stories that are going on. A lot of investment cross-border flows are actually going into these countries, which we also benefit from. I guess it's not coming.
Well, bear with us for a minute.
Could you kindly let us know to whom you sent the presentation? Nelly.
Nelly is there.
Our technical team has not yet received it. We are sorting it out.
I think it's okay. I can explain what this slide shows. It's not very difficult. It basically showed for a number of currencies in the region how they've performed over the last 5 years. I can tell you the conclusion. Most of them have depreciated, but not all. And the only thing that I wanted to show for the slide is how volatile some of these currencies can be. It's not just currencies in this region, it's currencies across the globe. And what the slide will also have shown is that when COVID-19 started, there's a big jump in a lot of currencies in the depreciation direction. And when the war of aggression started back in February last year, there was another one of these large jumps. So this is all that the slide showed, basically highlighting the great use of indexing your loans or taking out local currency loans in the first place to be insulated from these risks. Now, the second part, just wanted to focus on how this plugs into climate finance. So currency risk is, I guess, widely acknowledged as a key barrier to mobilizing private finance and scaling up climate finance as well. But specifically, currency risk affects financial risk of climate projects in three main ways. One is it undermines a local borrower's ability to predict its debt obligations. This goes back to the point that I mentioned before. By indexing your loan or by taking out local currency in the first place, everything becomes predictable from day one. Exposure to currency risk also makes the creditworthiness of, let's say, utility companies and governments in developing countries a function of the exchange rate, which is something that we'd rather strip away. Even a well-structured renewable energy project, for instance, will fail if the off-taker cannot pay or if the sovereign guarantor is in crisis. Now, also, it relates a bit to the sovereign, but currency risk in a sovereign book can also create a debt doom loop where, let's say, large exogenous factors like COVID-19, like the war of aggression, can lead to sudden depreciations and put debt distress back on the table. These dynamics force governments in crisis mode, and that basically means that they're not focusing anymore on long-term planning that is required to really make the green transition into a success. And basically, what TCX preaches is if we want to unlock private climate finance at scale, and we want to plug the SDG funding gap, FX risks also need to be drastically reduced for both private and public sector borrowers. And I'll leave it there.
Thank you very much, Mr. Gudrian. That was very clear. Oh. Actually, your presentation came just now.
Oh, I think
we were able to display it just.
Yeah, sorry. Yeah, I think it explains it. Maybe allows me, if it's allowed, to add one more small thing, because maybe one thing that we often hear is that there's basically no way around the fact that local currency loans are usually more expensive than their hard currency equivalent. I always think about this. The costs are basically the ultimate insurance against currency volatility. And obviously, we try to pursue the most competitive pricing for all of our clients. But other venues of increasing affordability are being explored as well by us. This means that basically we have successfully concluded a pilot with the European Commission to improve both affordability of local currency as well as scaling. And that pilot is now being expanded into a full-scale facility for selected countries and transactions to support climate and green investments in those currencies. Thank you.
Thank you so much again. I think the graph on the screen makes it very clear that indeed currency hedging is a key ingredient to secure investments across the region, and it shouldn't be overlooked for sure. Ladies and gentlemen, we are a bit late on our program. So what I would like to do is to ask second questions to our speakers, and I would like to ask them to reply in a couple of minutes, maybe 3, but not more. And my question is about the challenges that you see on the ground in the region. When it comes to accelerating or closing the investment gap, if you like, and maybe tell us what you think public authorities, governments should do to really accelerate investment in the region. And I will start again by Magdalena. I don't know if you want to say a few words on this.
Thank you. Thanks a lot. And thanks also to all the other panelists, as I don't really need to highlight some of the examples from using the FSD plus guarantees, because all of them already spoke about the examples. I guess what I want to say based on this is that clearly there is an issue of demand and supply. And I think the challenge is for all of us, not just for the national institutions, but for all of us, is to find ways to match the supply and demand. On the supply side, there are new instruments coming to the forefront, all the instruments that the first speaker mentioned, and I went deeper into the use of budgetary guarantees. Across all these examples that were given, the guarantees can be used, whether it's to reduce the costs of currency hedging, whether it is to support utility scale renewable energy, private sector renewable energy projects, or renewable energy investments through the utilities, or whether it is to scale up new climate technologies. For instance, these days we talk a lot about green fuels or low carbon materials. The guarantees can be used. They can be used also, somebody mentioned the Team Europe approach, the Global Green Bond Initiative that would invest in green bonds. Again, all of this is great. Programs are there. I mentioned 40 of them with significant focus on the regions we're discussing today. It is a question of bridging now the availability of these programs with the demand for these investments. So I really call on all the national authorities that are here to learn about the programs and to work very collaboratively with our partners who are around this table, mainly international development finance institutions, to really also, if you allow me, sometimes even to challenge them, what is for us in this country, in our country, out of this guarantee program that you have. And so that we work collaboratively to really scale up and accelerate these project pipelines. But sometimes, and that is, I think sometimes, especially for the private sector oriented pipelines, we also need to do more when it comes to awareness building, because it is also the local partners, the local banks, the microfinance institutions, the local project promoters that need to know about these opportunities. And we can't just have the expectation only on our IFI partners. For me, at least, they are the channel, but the final beneficiaries are not the IFIs of the guarantee programs, are the countries, and it is to the benefit of their population.
Thank you so much, Magdalena. This is a nice challenge for our partners here around the room. I would like to turn to Mr. Boomsteenas. According to you, what are the main challenges that you see on the ground, and maybe what would be your recommendations to partner governments to accelerate the green investment trend?
So I'm a banker, if you wish, and I see usually opportunities for on the ground, and Central Asia, of course, has its own, let's say, context. As you know, in terms of green investments in particular, much of the region's water originates in the mountains of Tajikistan and Kyrgyzstan. And then the region has a huge potential to develop hydroelectric power. And I have, for example, Ragun in mind, which has a potential to transform not only Tajikistan, but the whole region. However, to get there, first of all, you need to ensure that the project is bankable, so that you are able to mobilize funding on fair terms, and the terms that the country and the region can sustain. But also what is important is to have the overall both regulatory reform that enables those investments to happen, but second, the cooperation in the area, in particular in the area, I would say, of connectivity. Because if you can produce, let's say, hydropower, green energy in Tajikistan, but if you cannot sell it to neighboring countries, then most of the economic raison d'etre of the project fails. So I think the big role that we as Team Europe partners and together with the governments, in my particular case, Central Asia, but obviously we are talking here Eastern Partnership countries as well. What we have to do is to create the conditions that will be conducive to investments on the regulatory connectivity and common ground. Thank you.
Thank you so much. I will now turn to Andreas, your colleague. Maybe you can give us your take on this.
So I want to raise 4 challenges and key lessons learned, and I start with a reality check. And I think this is the one thing that I took out of this. So it's financing or green finance is much more difficult than one thinks. Although general awareness has increased, but really how to increase the share of green financing is not so easy. And we see that even banks that are highly motivated struggle. So I think we also need to be, let's say, realistic enough in terms of the ambition and see this whole as a transition process where you start small, and then you subsequently increase your portfolio of green lending. For example, there's one of the leading banks in Georgia last year reported as climate action portfolio 1.9% of its portfolio. 1.9. It's not a lot, but it's already a start. It's probably a bit underreported, but I think this is really something we have to be realistic. We're not going to switch to 100% climate action lending tomorrow. The second point is around eligibility criteria. That's a big challenge. We need to find a mechanism that is simple and easy for our intermediaries, financial intermediaries, but also for the clients to handle, but at the same time avoids greenwashing. So there are good solutions. Also, the EBRD colleagues have worked a lot on this. On the EIB side, we have developed also for inside EU the Green Tracker as an easy-to-use system for the intermediaries to check whether an investment is really a green investment. And at the same time, also the work on the taxonomy, on the local taxonomies, helps a great deal because it really creates a level playing field and a common standard. The third point is the need for an ecosystem and for partnerships. We have found out that the technical assistance and this kind of like policy dialogue with governing bodies and of the banks are very good entrance points. Really win the board, win the top management to buy into this and increase awareness. And at the same time, also this working hand in hand with the regulators, I think we really need all hands on deck for this. And then the final point that I want to make is around incentive mechanisms. Of course, and this connects very well to what Matthew mentioned at the beginning. We see that in the past, there are a lot of credit lines using subsidies, and they've worked. But the problem is as soon as the subsidies end, the lending ends. So the question is, how can we set up a system that is more sustainable? And we are also working on mechanisms how to internalize this and really win the banks for a partnership where we minimize the concessional element that we as IFIs provide. And we really have also the intermediary banks to see this as an investment into their clients and in risk mitigation. So I think that's one thing that we are also working on.
Thank you very much, Andreas, for these insights. I would like to now turn to Ms. Brockman. Would you have some pearls of wisdom for us?
Yes, I think I follow the same methodology as Andreas. We'll start with my 4 points. And one of mine, or the first of my points, is it is about very often capacity constraints, and this we keep on seeing it on the level of financial institutions, but also on the level of borrowers and clients of those financial institutions. And here we genuinely believe in necessity to deliver technical assistance and advisory, but in our experience, it works best if it is combined with investments where partner banks and clients can also practice the knowledge that they acquired. So actually, doing it and learning as we go. And second aspect that we have seen emerging, and we have been deploying different instruments to overcome this capacity constraint, is use of digital solutions. And on the EBRD side, we have developed a green technology selector, which is effectively a database of green technologies and solutions. It is available in all countries of operations of the EBRD in 20 languages. There are 40,000 plus specific types of technologies that we support through the credit lines, and we invite everyone to use this system because actually it's free of charge, and anyone can very easily identify products and suppliers on the ground. But what we have also seen is increased presence of digital solutions in the countries of operations. Like, for example, in Kazakhstan, recently there was a platform launched, I think it's called Material Marketplace or similar, that supports trade in materials, effectively instigating circular economy, adoption of circular economy strategies on the ground. And many of the commercial banks that we have seen over the COVID period starting their basically startup businesses in form of marketplaces. We saw it in Georgia, in Central Asian countries, in Baltics, in Ukraine. So there are many solutions that market already offers, and we should be building on those. Second aspect is supply chains. In many countries of operations of the EBRD, green technologies are not produced locally. So we have to strengthen and find the ways to strengthen supply chains of those technologies and solutions, but also local domestic servicing of those technologies, because this is a preventive market barrier for many investors. And here there are different models. There is preferential treatment of those technologies on the domestic market. There are models where governments provide tax relief, but also we as IFIs can support trade in those green technologies and maybe offering competitive instruments, trade finance instruments, and we do it on the EBRD side. Just last year, we have provided over 400 million in green trade instruments. Third barrier and some possible solutions is still preventively high cost of green technologies and solutions. Just taking one example of low carbon mobility. If we want companies to go for model shift, electric vehicle typically costs 20% more than comparable regular model, plus charging infrastructure is needed. So who is going to take the cost of this shift? So this upfront costs needs to be supported somehow, and there are different, again, models and instruments that can be deployed. For example, leasing could be one of the market-driven solutions that can be rolled out, but also guarantee instruments. And Magdalena was speaking, there is a lot of opportunities in deploying guarantees, and we have been very successfully using first loss structures, but also portfolio risk sharing model that enabled partner financial institutions to relieve capital and do more green investments. And last but not least, lack of long-term strategies, not only on the level of real economy, but also on the level of financial institutions. And very similarly to our partners from EIB, what we are doing at the moment is that we are engaging and working together with central banks and financial regulators. For example, in Armenia, in Kazakhstan, where we are starting a comprehensive capacity building program that will help to put financial institutions and banks on the transition planning pathway. we will go beyond just green finance. We'll look at climate risks and climate ambition, engagement with clients, and disclosures, most importantly, because banks need to be future-proof. Thank you.
Thank you so much, Mrs. Brockman. Mr. Gudrian, would you like to come in on the challenges and maybe some recommendations on for our partner countries on things that could be improved to stimulate green investments?
Yeah, thank you. Of course. I think it would be from both the public and the private sector would both benefit from the government opening up their economy more and more, and in particular the capital market. By opening up capital markets more, information transparency will increase. The visibility of, for instance, yield curves increases, by which confidence in local markets would also increase, benefiting both local investors, but also drawing offshore investors, perhaps for the first time into such countries. We, as TCX, have notably seen this effect in two different countries, Uzbekistan and in Georgia. I think both of them might be here, so we'll highlight those examples. So in Georgia, TCX has been active since 2010, also with the help of the EIB and the EBRD in the private sector, both helping to offer local currency loans to local borrowers and issuing offshore local currency bonds. And both activities actually, with the help of a very supportive government who was actively and still is pursuing de-dollarization, led to a deepening of the local capital markets and an extension of the yield curve. The capital market actually developed to some extent now that TCX actually is no longer needed for some transactions, which is we see it as a wonderful existential thing about our own fund. And in Uzbekistan, TCX also started in the private sector, actually with some of the local banks, one of them who is even here, also providing local currency solutions for years to the private sector. De-risking cross-border flows, including several green investments into the country. But ultimately, actually, the government also actively pursued a de-risking strategy by increasing its local currency bond market issuance, going into the Eurobond market, and de-risking through TCX's product, which we see as a great success. Besides opening up the capital market, the government and other policymakers can also actively pursue can also design supportive regulatory and legal systems to help promote de-dollarization further in the public and the private sector, by doing so, setting the example from the top, which I would think is very important. Thank you.
Thank you so much, Mr. Gudrian, and thank you to all five of you for being part of this panel today. And thank you also, Mr. Savage, for the introduction and the initial presentation that set the scene very conveniently. We have 1.5 minutes for questions and answers. Now we can take a bit more time, but I would like now to open the floor to our participants. If there are any questions that you would like to ask our speakers, the floor is yours. Don't be shy, ladies and gentlemen. Yes, please.
Must speak, if you can. Hello, everyone. It's a pleasure to be present at the conference and to see many familiar faces in the room. Many thanks to OECD for raising such important topics for discussions. The topic of green finance is extremely important for Ukraine, given the challenges that Ukraine is facing today. As was already underlined, attracting green finance can provide countries with numerous benefits, both in terms of the economic growth as well as solving problems related to climate change. It is also access to the innumerable programs of international development banks and funds aimed at supporting sustainable initiatives. At this forum, I represent the green finance sector of the state enterprise Forest of Ukraine. Forest of Ukraine is one of the largest state-owned forestry companies in Europe. Every year we carry out reforestation and afforestation on area of about 35,000 hectares. And we also cooperate with communities on the transfer of the forest areas to the Forest Fund, which contributes to the preservation and protection of self-seeded forests and increasing their productivity. One moment. As we know, the forest sector has a significant potential for attracting green finance. It is the main absorber of greenhouse gases and one of the most important ecosystem factors for prevention and adaptation to climate change. However, Ukrainian forests are gradually losing this potential. The full-scale war unleashed by Russia in Ukraine caused significant damages to forest fund. About 3 million hectares of forest were affected, which is more than 30% of total area covered by forest vegetation in Ukraine. Therefore, we prepared the UK Forest project, which is aimed at the restoring the forestry sector of Ukraine by using its carbon potential. Within the framework of the OK Forest project, we plan to obtain reliable data on the absorption of emission in the forest sector of Ukraine, develop and implement projects on sustainable forestry. Project contains pilot measures that will demonstrate the technical and economic feasibility of certain efforts in sustainable forestry and access to carbon markets. Upon completion of the project, a voluntary emission compensation system will be provided in Ukraine, which will provide an opportunity to sell generated carbon credits on voluntary markets to companies interested in carbon footprint compensation. It will allow to attract appreciated financial resources for the recovery of the forestry sector of Ukraine after the war. I choose the development of carbon projects can also help other countries in attracting long-term financial resources, in particular those that manage forest lands or implement large emission reduction projects. Therefore, countries should develop institutional capacity and become more transparent from the point of view of environmental sustainability. So, for example, in order to ensure transparency in the work of this green finance and compliance with the international norms and rules, the regulation of the green finance activity has already been approved in the company. The regulation defines the procedure for evaluating and selecting projects, targeted use of funds, procedure for reporting on the impact of project on environment, managing environmental social risks, etc. But today in Ukraine, the green finance market is still at the stage of their creation. There is a lack of Ukrainian certified auditors and emission verifiers in the forestry sector. We are currently looking for partners for joint implementation of the project. In particular, we are interested in cooperation with international organizations that will be involved in the preparation of feasibility studies for carbon projects, conducting independent audits and verification of projects in the field of sustainable forestry. We also hope they support us in the promotion of projects on voluntary carbon markets. It will be a pleasure to find such partners at this year's conference, and I will be glad to discuss the possibilities of cooperation in these days. Thank you.
Thank you so much for these remarks from the representative from Ukraine. Of course, we understand the magnitude of the investment needs for the reconstruction of Ukraine, and you described a number of specific areas where such investments would be needed. And be assured that the European Commission and all the partners here sitting here next to me are very much aware and eager to support you until the victory and for the reconstruction of the country. Thank you very much. I don't know if there are any more questions or remarks. In which case, I think I will conclude by thanking again all our partners who made it all the way to Brussels today with us. What I retain from the discussion is that there is a wealth of instruments and programs on the ground in Central Asia and the Eastern Partnership region. To stimulate and to de-risk investments and to take all of us to the level of a net zero economy. We heard about the guarantees that the European Commission has put in place and that some of our partners here have been using and will continue to use in the future. We heard about credit lines. We heard about currency hedging tools. We heard about support that is being given to develop capital markets around the region. So all of these are very, very useful and very necessary instruments going forward. We also retain that we have very committed partners, financial partners, and it's really good to see all the efforts that is put into responding to the climate challenge and to develop climate finance. And we also heard from the initial presentation, but also from the speakers today, that there are still a number of constraints that needs to be overcome. Be it in the field of corporate governance, upgrading the regulatory framework, maybe developing a taxonomy in the countries where it doesn't exist, developing long-term strategy for green transition, and the need to develop a solid pipeline of projects. And of course, again, our partners here sitting here with me are very much willing to support you in that endeavor. So I will now thank you all for participating in this session, and I think we have a coffee break.
Yes, can I say just one word before that?
Sure.
Yes, thank you very much. I think it's been a very interesting discussion with plenty of information, plenty of food for thinking. And I would personally somehow have a request to our representatives, particularly from the governments. I think Magdalena probably and some others already raised the issue. I think having so many opportunities and maybe not making the best use of it in the countries because of lack of information, because of not understanding that these opportunities exist, I think it would be good for you going back to your countries and contacting, I don't know, people in is it in the banks, in the national banks, in some of the commercial banks that all these people and IFIs work with, but also ministries of finance, ministries of, some of them are here, ministries of economy, and spread the word, simply said, allow others and potential also borrowers, potential enterprises that may need to get access to this sort of support instruments to know about it. Because sometimes I think it's simply a matter of not knowing that these opportunities exist. I think none of these institutions alone can go everywhere and do this work for us. We need collectively to put more effort and to let those that need to know this know about this. Otherwise, we can continue speaking in conferences like this, and it's very nice. But if somebody doesn't go out there in the field and allow this information to be communicated further to those that need it, we will keep getting into the same issues, into the same problems. So it's a request on our side, if you can communicate this further with within your governments and the regulatory community. Thank you.